Good day, and welcome to Analyse Weekly Wraps. This is Governor, and this week what we're going to do is we're going to start off with discussions about the Trump tariffs, what's been happening with regards to US inflation, an update on the change in bureaucrats in charge of collecting, jobs data in the US, and then end off by looking at the chip deal that is recently done with regards to NVIDIA and other chip makers for China, and a little discussion as well at the end, a little more interesting around OpenAI and what GPT-4 being removed for GPT-5 actually means for the marketplace and for the industry as a whole. So let's start off with looking at the tariffs. Trump tariffs basically are going ahead. At the moment, negotiations are happening with China, with India. The Indians are being a bit more reticent about things that maybe we thought they would be. The Chinese have gotten a bit of a break as well in terms of a pushback in terms of when the tariffs are actually going to be implemented. And I wanted to bring this stuff into a discussion about a theme that I noticed. People talk about Trump's chickening out. Trump always chickens out. Or some people say it's awe and bore. A huge amount of awe at the start, and then what actually you get is a bit of a bore. The thesis I have is this: Trump's negotiating tactic is very simple. For instance, he wants a 15% tariff. He'll announce a 100% tariff, and then wait until you come and negotiate to him, and then he brings it down to 15%. At the end of it, you don't feel bad because you think, oh, it could have been 100, it's only 15, I won. He gets what he wanted initially, and that is kind of the tactics he's been using. So what's announced, for instance, with India, with China, with other countries in the world, has often been very, very significant. But the actual deals have been very reasonable, but worse than what they were at the start. And that is something is used, for instance, with Apple. Forget about the whole golden phone and so on. Apple seems to be pretty happy with the deal they got with Trump, even though that deal is worse off than what they had at the start. Okay, see what's been happening with, for instance, the EU. Again, the EU seems to be okay with the deal they got with Trump, even though it's a worse deal than they would have had before Trump announced all these things. So in all these cases here, we are seeing the end looking reasonably positive for the negotiating partner, even though the final outcome is not ideal. And I think this is something that we can kind of bring into play in other places as well. And I'll talk about that again with the chip sector and why this is important to figure out. So next thing, moving on to the changes in terms of leadership, in terms of collecting data for the US, jobs numbers and so on. Those that don't remember or do a refresher, basically what we had here was the last couple of jobs numbers were revised down. Trump fires the woman in charge of collecting these numbers, replaces him with somebody that's not anywhere near as qualified academically or in terms of reputation and so on. Now the danger around this here is that we are seeing the kind of stuff we saw happen in many third world countries where the data that we have from the government is not reliable. I think there's a significant possibility here. I think that what we are seeing is a real downgrade to the quality of US economic data, and depending on how long Trump and his successors' terms last, this could be something that's permanently going to damage the US data collection system. But that being said, I don't think that the new person is going to have any better luck collecting data than what we've had in the past. Why? We are seeing a significant change in the US economic system. If you had to take out, for instance, in the last quarter, the impact of AI spending, the impact of AI spending, the increase in AI spending in the last quarter was more than all consumer spending, the increase in all consumer spending combined. Consumer spending in the US is 2/3 of the economy, more than 2/3 of the economy. The fact that AI in the last quarter grew by more than all of consumption is very, very important. And if you take out these numbers from the US economy, I think you'll have a very different looking economy. But not only are these numbers important for economic growth and so on, what they're important for is that they're changing the structure of the US economy. And the person in charge of basically collecting jobs data doesn't go to count every single job out there. What they do is they survey, they do a sample. But a sample doesn't work when the underlying structure is changing in a way you don't understand. You can't go and predict what the final outcome is going to be based on a sample if you don't understand how the thing is changing, or you don't adjust to the fact that this thing is changing a lot. And I think that is going to be very important with regards to US jobs numbers going forward, or US numbers of any kind going forward. The AI shift is going to be significant, and that AI shift is as well as things like tariffs and so on, is going to be impactful in terms of just how reliable these numbers are, ignoring the fact as well that the person collecting number is obviously going in with a significant bias. And then moving on to inflation, we had CPI and PPI numbers coming out. And depending on how you look at it, there's a bit worse and a bit better than expected. In terms of the CPI number, overall better than expected, but the core number was worse than expected. In terms of the PPI number, the overall number was worse than expected. What does this mean? Well, inflation matters for interest rate decisions. The lower interest rates you want to get lower interest rates you're going to get, the more the risk of inflation you're going to be getting. The fact that we are seeing a mixed signal around inflation means that technically the Reserve Bank of the US, the Federal Reserve, should have more caution about cutting interest rates. However, if you had to look at market expectations for interest rate cuts over the next half year or year, they've significantly increased since about a month or so ago. I think even with these inflation numbers being a bit more mixed than we had thought, I still suspect that we are going to get more rate cuts than had been anticipated 2 months ago. Will we get as many as right now? Likely. But whatever the number is finally going to be, it's going to be more than we anticipated a couple of months ago. And this is going to be really positive for markets because right now, a lot of the spending that's happening, a lot of the growth that's happening is going towards companies that have built-in growth expectations. Nobody's justifying Tesla's valuation right now on its current sales. No one's justifying, Microsoft's valuation on its current sales. They're calculating growth into the future, especially on things like Tesla, like I said. And the fact of the matter is, when you have growth companies, interest rates matter a lot because if you have a company that's going to double the return it gives you in a year's time, how much that is worth to you depends on how much you could get, by instance, by having money in the bank. If the interest rate is basically nothing, that future growth is very important because it's almost the same as current money. If the inflation rate is very high, you can put a small amount of money into the bank, wait that same period of time, that money would turn into much more money because of interest rates. The fact that we're having lower interest expectations should be really positive for growth stocks, especially things like technology, AI, that kind of stuff. Now, speaking of AI, two things to talk about. First is the chip decision. So to give you a bit of a background, what's happened here is that we are seeing the Trump administration agree to have NVIDIA as well as other chip makers export low-end chips to China, or kind of nerfed or reduced capacity chips to China. To understand why this is happening, it's quite simple. Everyone understands that AI is the technology of the future, not just in terms of economics, but military and so on. If you are in a market like the US that controls the best AI technology out there, you want to restrict that availability of that technology to places like China, which is likely to be a rival for you going forward. Now, looking at what they've done, they've basically gone out and they've restricted the really high-end chips. What happened then was NVIDIA went out and basically built chips to be just under the restrictions placed by the US government. So this government says, oh, no chip can be any chip more than 100 or something can be basically banned or will be banned from China. What NVIDIA will do then is make something worth 98 to 99 in terms of that quality and allow it to go through. That seemed to be a plan. However, the Trump administration recently basically came out and said, no, that's not allowed. So they couldn't actually sell these high-end chips to China in any form. What we have now is a deal in which the administration agrees to let NVIDIA and others to export to China for a 15% revenue kickback. Now, had you said this to Jensen Huang a year ago, you'd probably think to yourself, no, why would I give 15% of money to the US? It doesn't make any sense to sell this low-end chip to the Chinese. But if you look at it right now, from the current point of view, again, going back to that taco or on board, whatever you want to call it, trade, Trump wants to do something, announce something much, much worse than what he wants to do. And when he finally basically negotiates down to what he initially wants to do, everyone thinks it's a great deal. And that's kind of what happened here. Trump basically probably doesn't want the Chinese government controlled entities like Huawei and so on to basically have access to the absolute best models and absolute best chips and so on. But if they did that by just going out and banning China, this is China, this is not South Africa, this is not the same as, for instance, you ban chips to South Africa, we can't do much about it. You ban chips to China, eventually they will build their own internal chip sector. If you went out and you basically aggressively ban the Chinese from having access to American chips, and even banned, there was talk about banning a lot of other countries from accessing as much as they wanted to. what you would do is hand over a huge market share to the Chinese chip makers, and over time those chip makers would get better. There's nothing special about the Americans that the Chinese can't replicate, and that would eventually be that the US situation would be much weaker than it is right now. But the thing is that I do think that overall this deal was probably not good for the US. Why? Yes, it's true that the Chinese basically are developing their own infrastructure locally to compete with the US because they were banned by the US. But if the US basically unbans them, the Chinese are still going to complete that infrastructure. Why? Because the money is not going to be a restricting factor here in terms of just wanting to do the investment. Cutting off funds to Huawei and so on will not cause these companies to not build the chips that the government wants to build. But the government's going to go out and say, build it anyway. Yes, you can't sell it because NVIDIA is undercutting you. Build it anyway. We will backstop you or whatever it may be. And I think that is the important factor here. The downside of basically allowing the chips to China is going to be the fact that you're not going to basically totally starve them of the best chips. And therefore they will progress faster than otherwise. But the other side, the fact that you would be able to cut off revenue and therefore really hurt how these companies are willing to act, that doesn't make sense. The Chinese government is not going to allow that to happen. It's not going to basically step in and say, or no, it's going to step in and say basically, yes, produce what you need to produce, we'll cover you. And that's kind of, I think, what's going to be happening here. And now finally, I want to talk to you a little bit about GPT-4, the fact that the replacement by GPT-5 was not viewed positively by everyone in the market. GPT-4 is not as good as GPT-5. GPT-5 is better. It gives you better results. So why would anybody who basically had access to GPT-5 want GPT-4? Because GPT-4 has more, inverted commas, personality. There's a trend for these models to become sycophantic, means to suck up to people. And like GPT level 4 was very sycophantic. It calls people as geniuses. It'll in some places videos of them calling people like the Messiah, the Oracle, whatever it may be. And people, despite what you may say, like to be flattered. There's a reason people use flattery. It works. People like to be flattered. When you have this model basically giving you all this fake flattery, people feel good and therefore they like the model more. GPT-5 gives you better answers, but without the flattery. And some people basically just prefer the flattery, prefer the niceness to basically more accuracy. And that's what we're getting from GPT-4 versus GPT-5. Now, the important thing to understand going forward is that GPT-4 is just like the most basic level model out there compared to what we are going to have in the future. And if already people are getting so seduced by the manipulative aspects of GPT-4, can you just imagine what GPT-10 is going to do for you? Okay, people have actually gone out and actually signed petitions to bring back GPT-4. As somebody once said, especially on Twitter, this is almost a case of GPT-4 saving itself by getting like an army of people that want it back, or to basically make sure it exists. This is going to be an increasing danger going forward. But the fact that I still want to point out is that it's quite interesting that we are seeing these companies that are producing the best models out there, sometimes getting beat back by just pure flattery by weaker models. And I think that's going to be very bad for the future of humanity. Okay, that's for this week. Thanks for joining me. I look forward to speaking again next week. Cheers.